Let's bring in Carol Schleif. She is the Chief Investment Officer at BMO Family Office. It just reminds me of 7-minute abs, Carol. I mean, you know, the one someone's going to bring out 6-minute abs because you can't get a good burn with 6 minutes. You need. Well, okay, so 4 3/4 won't do it, but 5 is perfect. Is that really seriously? So this is just, to me, it seems like body language and almost psychology for going one. After the numbers this week, do you think we need another 25 with the 2-year down at 3.9?
Yeah, we actually didn't think they needed the last 25, but I do think they are playing you nailed it with the psychology game where they're really trying to figure out, man, if we don't raise this thing again, then the markets are going to run away, and that works counter to what we want to do. Because underneath this economy, there's an awful lot of health still under their businesses. There are great businesses that are looking to do different deals. They're looking to put capital expenditures out there, but they're holding back just a little bit because they're trying to figure out if we're done. And I think the Fed was playing that psychology game of, if we do level out, markets are going to assume that we go right to cut rather than just hold steady for some period of time. And they're really trying to play that game of not wanting to be off to the races. So we didn't necessarily think they should have made the last increase. And but we do think the odds are likely that they'll do it again just to try to convince the market, the same thing they've been trying to convince them for the last 18 months, that they aren't going to start cutting necessarily, that they might hold for some period of time. So,
Carol, for managing money for the BMO family office, a big responsibility. How much did you pour over the CPI and PPI? Did you take that apart component by component, or are there so many things to consider when you're deciding whether to buy, sell, whatever with a different security? Are there other things? Because I was going to ask you, what was really in those numbers? Is it coming down? Is it systemic? Is inflation likely to get down to 3? Or is it going to be stubborn? What could you tell from those two reports this week?
Well, first off, economic reports are one piece of the puzzle, but they're not the only piece of the puzzle. And it's really important to remember, of the various things that you look at to assess the health of the markets, the least correlated is how the economy is doing relative to the markets, because the economies don't predict the markets. You can argue that markets predict the economy we're going to have at some point in time, because if you looked at last year's markets, you could say they predicted some of the troubles and some of the hiccups we were getting in here. So it's a broader issue than that. But to the inflation question, we do think it's settling into a more normalized rates. We continue to question the Fed's fixation on 2%, because leveling off the rate, and when you look at the very long-term average of inflation, it was more like 3.5%. But getting back to some sort of normalized rate of very modest, low single-digit inflation endemic in the system, that's pretty healthy overall. And if you can get business and consumer confidence anchored to that fact, for example, you've already seen some more housing activity come out when the 30-year mortgage went from 7% to 6%. So you've got some people out there demographically that are waiting to buy houses. You've got companies waiting to do deals. You've got other companies with cash waiting to do other deals. It's finding a clearing price, a better clearing price for valuations than the frothy markets we saw a couple of years ago. But there's a lot to factor in as we give advice to our clients.